here to share with you about the market updates. The Fed is poised to raise interest rates once again during the July meeting, and we are going to be covering about other central banks' pivotal choices made this week about interest rates. Amidst the persistent signs that the worst inflation crisis in decades is easing, the world's major central banks will meet in the coming week to set monetary policy. While the Fed and the ECB are expected to raise interest rates by 25 basis points each, the more important focus will be on the signals from policymakers on whether further rate hikes are possible or whether they can plan to extend the term of rate hikes. Fed Chairman Jerome Powell and ECB President Christine Lagarde both warned that the inflation remained too high, forcing them to raise borrowing costs further, but economists say the policy outlook for the end of the year remains uncertain as neither central bank will meet again until September. The Bank of Japan remains an exception, with more than 80% of analysts surveyed expecting BOJ Governor Kuzo Ueda to continue to provide support for the world's third largest economy, even if inflation remains above the 2% target. Fed policymakers are poised to raise interest rates to the highest level in 22 years on Wednesday, while retaining a tightening bias, suggesting further action is likely later this year. FOMC expects the interest rates rise by 0.25% to the 5.25% to 5.5% range, the 11th rate hike in the past 16 months. The interest rate decision will be issued at 2 p.m. ET. 30 minutes later, Powell held a press conference. The July hike follows a pause in June that was intended to slow the pace of rate hikes as they approached a level that was considered sufficient to bring inflation back to its 2% target over time. Still, Powell and other policymakers wanted to show firmness and reserve the option to raise again if necessary to avoid another spike in prices. James Knightley, chief international economist at ING Financial Market LLC, said, "Inflation is slowing but not fast enough for the Fed. With the job market remaining firm, officials are not risking it." The U.S. stock earnings season is about to enter an intense disclosure period, and the reports of AI-related giants are undoubtedly the focus of the market. Next week, Microsoft, Google, and Meta will report their results, as giants related to artificial intelligence, cloud computing, and digital advertising. Their reports will affect the market expectations, as well as other technology companies that will publish reports later, Amazon, Nvidia, and others. Microsoft, in particular, as the current leader in artificial intelligence, just announced its pricing for Office 365 Copilot last week. If the market doesn't see meaningful income from these giants for quite some time, the so-called AI concept chart may cool in general, especially those that are more speculative. For AI-related equipment suppliers such as Nvidia, Broadcom, Alibaba, and Arista Networks, the performance guidance of technology giants, especially in terms of spending, will be key. The cloud-related content reported by the three giants is crucial for Amazon, which relies on Amazon Web Services for most of its profits. In addition to ServiceNow profitability, they could also impact leading software companies such as Datadog, Dynatrace, Cloudflare, and MongoDB. The Google is expected to achieve a 9% profit growth this quarter after 4 consecutive quarters of decline, of which core search sales may increase by 4%. The merger of the DeepMind and the Brain divisions will also accelerate the introduction of more new products related to big language models. Microsoft's adjusted operating margin is expected to rise to 42% from 40% a year ago, and Microsoft protects margin by raising pricings as the advent of artificial intelligence push up the cost of processing workload. Jeffries noted that Microsoft recently announced pricing for AI assistants for enterprise customers is more than double of what was initially expected. After 6 consecutive quarters of contraction, the market expects Meta to return to growth the second quarter, with earnings per share to rise 19%. Analysts believe that earlier this month, Meta's new Twitter killer app, Threads, surpassed ChatGPT in popularity, thanks to Meta's existing Instagram user base. The new app will generate billions of dollars in revenue for Meta in the coming years. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.